Go ahead, John.
Oh, okay, we're on. Good morning, everybody, and welcome to the Gateway to Finance webinar. I hope you'll find it enjoyable, informative, and it hopefully will give you direction for your business life in the next few weeks during these uncertain times. Before we start, we've got some housekeeping notes. Could I have them up, please, Virgilia? Right, housekeeping. Can you hear me and see my screen? Please type yes in the chat box, and that's for all of the attendees. If you do have tech issues, can you please post a private message in the chat, and the Knowable team will respond. And one of the things that we've all agreed, all the presenters, is that today's webinar will be recorded and sent to you along with the slides within 24 hours. So you can take notes, but on the other hand, if you don't want to take notes, that's okay too, because you're getting the information anyway. And at the end or during the sessions, please type your comments and questions into the chat box. At the end of each session, then we will try to address as many as we can. And what we can't address on the day with our extensive panel will be addressed to you probably individually in due course. And we do often get people asking private questions. So rather than a panel member addressing your question publicly, if you wish it to remain private, please do mark your comment private. And yes, this webinar is being recorded. Thank you. And now I do believe it's Marta from the London Growth Hub Business Support Programme. Thank you, Marta.
Hi, everyone. Welcome and thank you for joining us in this series. My name is Marta Quiroz. I'm the Program Manager of the London Growth Hub Business Support Programme. This is part of a series of webinars we have been designed as part of the London Growth Hub Business Support Programme that consists in kind of 3 pillars: a one-to-one face-to-face advice. In this case, we will do it through other kind of tools, where our expert group of advisors will help you navigate all the issues you might have as a company and the programs, and you are entitled to almost 12 hours of support. And then we have a series of workshops and webinars. At this point, we are obviously developing as webinars. This is part of a series that we have developed. So please follow us in our platform so to know exactly which other webinars we're going to have in the future. The London Growth Hub program is a program that runs for 2 years. It started in November 2019 and will run until January 2020. It's part funded by the European Regional Development Fund. And as part of the program, as I mentioned, is the goal of the program is to support everyday businesses in the 33 boroughs of London. And we have 5 different hubs or locations that we are based our advisors. But obviously nowadays you can have access to any of them through the London Growth Hub website, and I will show you later. So please, Virgilia, next slide. Virgilia, next. Oh, thank you. Well, this is again, as I mentioned, a bit of a description of what the program is about. The 3 pillars I mentioned, which is the business support, the one-to-one support provided by our advisors. Then there's the workshops or events, and as this webinar I mentioned. And then the Business Accelerator program, the London Business Accelerator program, that is a specific adult program created to support 20 high growth potential companies that will receive support for 3 months in a series of very intense kind of webinars and sessions. So if we already selected the first cohort for this accelerator, but we will have 5 more until January 2022. So please, if you are a company that is interested or you think you fulfill the requirements, let us know and join us and check the further announcements we're going to do on the topic. So as I mentioned, some of you might have heard of us before or have worked with one of our advisors. If not, after this, please answer the feedback or survey form that we will send and let us know if you want to be put in contact with one of the advisors to have access to all those 12 hours of support. Also, please answer as much as you can how you've known about us and this webinar series, because it will help us to improve and to kind of adapt the communication to your needs. So please, Virgilia, next. So this is the London Growth Hub website. If you go there, this is what you will see. As you can see, you will see on the top of the page, get support from the London Growth Hub. And if you click there, you will reach a page where you can book the appointment with our advisors, check the latest news and the webinars that or the other events that are coming up. Virgilia, next, please. This is the link to the Growth Hub London Get Support. And this is the kind of the gateway for all the program and the different elements of the program that we are promoting. So next, Virgilia, please. So this is what you're going to see when you click in the web page. There's a little bit of explanation, as I mentioned, about how the program works and the access you will have to the support and the advisors. So if you go to this page and you scroll down, you will see a button where you can book the appointment, and you can select the advisors, the time that better fits you and your schedule. So if you can change to the next one, Virgilia, please. Okay, this is the London Growth Hub Business Advisors. They're very expert with the long trajectory in their careers, helping SMEs, unlocking their potential. Some of them have been mentors. They have more than 30 years experience, each of them. And I think, and for the feedback we've received so far, is a very kind of helpful program. And I'm hopeful that you will join us and get further support apart from this series. So this is all from my side. Just to remind you about, please fill in the feedback form. And now I'm gonna with further ado, I'm gonna leave you with John Macon, who will lead us and guide us through this webinar, and will introduce the group of experts and panelists that he has gathered to help us today. Thank you very much, and thank you, John.
Thank you. Slide down. Can we go to Hugh's first page, please? Right. I'd like to invite or have you all meet a management team I've known for quite a while now, led by a guy called Rob Boll, called the Evoke Management Team. And I've listened to many of the presentations that they've done, and quite honestly, I was so impressed. I wanted to get them involved with today and the London Growth Hub. To tell you about Evoke and to lead off with the first presentation will be Hugh Reynolds. Over to you, Hugh.
Hello everyone, it's Hugh Reynolds here. I'm one of the finance directors with Evoke, and today I want to take you through navigating access to the COVID-19 emergency support packages, all the initiatives that have been launched by the government. Next, please. So firstly, the areas to cover. What we're going to be covering are, firstly, discovering the emergency packages that are available, including a deep dive into the loans, grants, the job retention scheme, VAT deferrals and tax relief, and then some tips on how to learn to best to select and apply for the right finance option involved in all those, which is a very important factor, I think. Next, please. So firstly, the scale of the government package. Back in March, there was about 330 billion of government-backed and guaranteed loans announced, and that represents about 15% of GDP. And then there are also 20 billion of tax cuts and grants involved in that too. And that's on top of the 30 billion that the Chancellor actually announced during the budget 2020 of support to people and businesses as well. So it does represent a very large scale initiative to protect the economy and jobs. And then a few days afterwards, the job retention scheme was announced, and that certainly had very large take-up in the economy. A lot of business applying for it, and it's currently estimated that that's running at about 8 billion per month. The Chancellor also sought legal powers in the COVID-19 bill, which enables the government to offer further support it deems necessary. And I think this is one of the key things to note here. This is an evolving process. It was announced in stages in the first week or so, and there have certainly been tweaks to that throughout the weeks since. So it's a moving target. You do need to stay abreast of developments to see whether there are more things that can be available to you as a business. Next, please. So what's available under these government schemes? The job retention furlough scheme, as I'm sure many of you are aware, and probably many of you already applied for, currently 80% subsidy of the wage bill up to £2,500 per employee per month, and that was backdated to the 1st of March. Now, clearly a very key help in terms of survival for businesses, because in many businesses the wage bill is obviously a large part of the cost structure. There are a number of rate and grant initiatives, and I'll go into those in a little more detail, and similarly a number of loan initiatives such as CBILS and BIBLS. There's also the SME statutory sick pay relief, which is supporting the reclaim of SSP payments during the COVID crisis, and then self-employment income support for non-employee status individuals as well. And then lastly, there's the VAT self-assessment tax payment deferrals and the HMRC time to pay scheme. These are really more to do with timing benefits, but obviously a clear cash flow advantage in the short term as well. And then there are other initiatives on a more personal circumstance basis, such as temporary mortgage relief. Next, please. First of all, in terms of rates and grants, there's the 12-month business rates holiday for the retail, hospitality and leisure businesses, and also for nurseries to alleviate that particular sector. And then on the grant side of things, there's firstly the SBGF, which is the Small Business Grant Fund, running at £10,000, and applicable to those businesses that have already had the small business rate relief or the rural rate relief. And then again, in the retail, hospitality and leisure sector, there's a 10k and a 25k grant available depending on what the rateable value of the business is. So it's covered by that. And if you qualify for those, then should be contacted by the local authority in question, but obviously you can chase up if you have not yet heard back from them. Next, please. Then actually recently in May, a separate grant has been announced. This is called the Top Up to the Local Business Grant Funds. It's a discretionary fund for small businesses outside of business grant scheme with ongoing fixed property related costs. It has to be for a business with less than 50 employees, and the grant values are up to 25k, but will be at the discretion of the local authorities and the like. And there's further guidance coming out to the local authorities in the coming weeks. I think this one's evolving a little bit as we speak as well. Then there's Innovate UK, which is a 20 million fund for R&D grants of up to 50k, and I know that John's going to cover that in his presentation later, so I just wanted to list it down here, but I'll leave it to him to explain further. Next, please. So firstly, in terms of the Coronavirus Business Interruption Loan Scheme, which you hear as being called CBILS, this is very much targeted for the SME sector. The definition of a SME here is any business with a revenue of less than £45 million. And that will then be a facility that is access of up to £5 million of loans and asset finance. That would be typically over, say, a 6-year term if required, and then overdrafts and invoicing type finance up to 3 years. Now, of course, in most cases, to qualify this, you're going to need to show existing profitability and that you had a sustainable business prior to the pandemic impacting and disrupting your business. Structure is that the government would cover the first 12 months of interest and any lender fees that were applied. There'd be no repayment of the principal for the first 12 months, and the government will indeed provide lenders with a guarantee of 80% on each loan. So it's backed by the government, actually owned by the British Business Bank, and then delivered through the commercial lenders out there in the marketplace. It started with about 40 or so, but that has actually grown pretty quickly, and as of the 18th of May, it stood at 69. So obviously, you know, hopefully all your existing banks would be on there anyway, but we're seeing that a lot of the smaller outfits are starting to get accreditation as well. They're all listed on the British Bank website, so if you want to choose to apply to one of them, just look to see who's up there. And I think it's important to highlight here, of course, that the guarantee from the government at 80% is essentially there to provide lender confidence that businesses do remain responsible for the repayment of the loan. Next, please. Thank you. So next one is the bounce back loan scheme, which you referred to as BBLS. This was a new scheme launched only on the 4th of May. And this really came about because there was evidence that with the civils that we just talked about, a fairly slow approval process in the initial stages, the banks really struggling to get the approvals through their systems. This has been designed very much to enable businesses to access finance more quickly, and we'll go through some stats in a few slides, but I think it's certainly proving to be quite successful so far in the number of businesses that it's managing to be approved for. The structure again here is loans of between 2,000 and 50,000, up to 25% of the turnover of the business, and again a term of up to 6 years. The government will make a business interruption payment to cover the first 12 months of interest, much in the same way as it was in the civils, and again no repayments of the principal for the first 12 months either. But the big difference here is that the government is actually stepping up to a full 100% guarantee of both the capital and interest in the event of a default. Approval process is online. It's very much just a simple application form, and typically businesses are in most cases receiving the money in days. So it's very much has been designed for ease of application. The businesses, though, do remain responsible for the repayment of the loan, obviously, as per the civils guidelines. Next, please. Next one is the Coronavirus Future Fund. This is another new initiative going live. It's actually going live today. The government has set aside £250 million for this. And what it essentially is convertible loans of between 125,000 to 5 million to innovative companies which are facing financial difficulties as a result of coronavirus. It's subject to at least an equal match, though, of funding from other private investors. That's the concept of how it's being built out. Now, I think really what this is it's an option for startup businesses that typically rely on equity investment to get going anyway, and are unable to access perhaps the civils, for example, because they don't have that proof of a steady profit stream prior to COVID, because they're in that startup mode. Again, developed by the government and in this case delivered by the British Bank. A few criteria though for eligibility. They must have been incorporated before the end of last year. Must have raised at least 250k in an equity investment from other third-party investors in the last 5 years, and no share market listing of the business, and the trading has to be at least 50% and at least 50% of employees in the UK. And as I say, available as of today, going live. One of the things to note is it's actually the investor that leads the application, and obviously more information from the company will come as well as that ensues. Next, please. So really what the next section is going to be is some guidance and considerations for the entrepreneurs and the SME business outlets that are out there. So these are really going to be some immediate considerations of your own business and particular circumstances for you to think about, and tips as to how to best approach applications, specifically for some of those loan applications. Next, please. So firstly, on the job retention scheme, the furlough scheme, many businesses have already processed the application, I'm sure, to access this 80% government wage furlough subsidy, because it was a very key benefit in the early weeks. As I mentioned, it's running at around £8 billion a month, currently committed to that, because there's been very large take up on it. In fact, I think that was much larger than the government first expected. It's a very welcome support to the business sector. A couple of things to note, though, is that all employees do retain all their employee rights whilst on furlough, and they cannot work for your organisation whilst furloughed. And indeed, you may face penalties if that rule were flouted. It's good news, though, in terms of an extension being announced. That the Chancellor announced that extension from the end of June through to the end of October. With that is the concept of there'll be some part-time working versus furlough, a sort of mix of that, and Chancellor announced that there will be some employer contribution expected from the time frame of around August. I think, though, more details expected on exactly how that will work. And another thing that could be out there is, as the government, and this will be a moving target, I think, as the government decides on how exactly the lockdown will be eased, we may find that there are businesses that locked down for longer than others, and of course, a question that raises is, are they going to be given some treatment that helps them through that, i.e. would they get the furlough for longer than other businesses? We don't know the answer to that at this point in time, but of course it's one of these things that may yet evolve. Next, please. So with the grants, the rate relief, the SME sick pay relief, I think my view on that one would be, if eligible, then it's definitely a near-term credit to relieve the cash flow pressure. So, if you hadn't heard back from your local authorities with respect to the grants that you should be eligible for, or the rate relief, then, chase them, and indeed chase down any SSP relief that you need to do if some of your people are off. And then as regards the VAT and self-assessment deferrals and the HMRC time to pay initiative, I mean, again, this is very immediate cash flow flexibility, so I think it's a case of just do it, to get that benefit. Next, please. So with the loan category, I think what we've been seeing here is that it's a combination of the government, banks, and businesses needing to communicate and interact to create solutions together in something that is really an unprecedented situation. And it has had its challenges as that's been created and then implemented. The banks have definitely been struggling in the first few weeks to handle the volume and the speed of the CBILS applications. And I think one other thing that's in play here is that, this is in a backdrop of processes and criteria that were put in place as a result of the 2008 financial crash. And so I think, you take those two things together and it very much explains why there's certainly been some slow approval levels in the initial stages. It does appear to be getting a little better, though. But one of the reasons I think why the BBLS was introduced is, was to get that speed into the approval levels, obviously for a smaller type of loan, and it certainly seems to have alleviated some of the pressure so far. But even with the BBLS, there have been, some cases where it's taken a little longer than a few days to get approval. Loan availability, applying for this does certainly require care in the application. You need to be well prepared, positive and pragmatic. You have to prove that you have a sound and viable business prior to COVID pandemic, and a clear plan for the use of funds of the loan facility. So in your business planning, don't lose sight of the fact that the debt has to be fully repaid at some point. Don't overburden the business with debt. There is that 80% guarantee, but the business is liable. You really do have to work out what your needs are and what your business can afford in the medium term. But another thing is, it's not really just about the immediate survival mode. You need to be sure of short-term funding requirements for the subsequent upturn as it comes, specifically, for example, with working capital requirements as business starts to pick up again. And one other thing, of course, you should be considering is that, if you already have some debt in your business, can you negotiate debt repayment holidays on that existing debt just to ease some of the cash flow constraints on your business during this tough time? But essentially, you've got to consider what is right for your business. Next, please. Ongoing developments so far. Government initiatives, as I've mentioned, continue to evolve and react to the status that we're seeing out there in the marketplace. The initial announcements were over several days, and then obviously these evolutions have continued over the weeks since then. Clearly, there have been difficulties in the civils approvals, and certainly in the early week or so, some of the T's and C's imposed by the banks, they were actually originally even requesting personal guarantees for loans less than 250,000. There were some quite high interest rates out there that were being requested, and the overall approval levels were pretty low. Since then, there's been some pushback by the Bank of England and the government on the commercial banks, and they've removed the condition of pre-refusal of a standard commercial loan. The personal guarantees for loans less than 250,000 have been removed as well. And the Chancellor was pushing back on the banks against some of these high interest rates that were being levied. And then, of course, recently, as I said, the Bibbles has been introduced for really speeding up things in terms of access to loans of 50k or less. Will there be further changes? Of course, we don't know, but quite possibly. And I think the thing here is, as you think of all of these initiatives that the government has launched, the SME sector, as I understand it, accounts for around 23 million of the workforce. So it is very critical that the government, continues to support viable businesses to survive through this pandemic. Next, please. So here I just wanted to show, a little bit of feedback of how it's going so far. I mean, in recent days, the Bibbles loans are up to about 8.4 billion for about 268,000 loans, and Civils 6.1 billion for about 36,000 loans. And then in terms of the completion, there's been about 364,000 Bibbles and 71,000 Civils. So it's running at about 74% processed and approved for Bibbles and 50% for Civils. So I think that kind of shows the success of the Bibbles, because it really was only introduced very recently and already hitting that 74% level. Next, please. So moving on as to how to apply, firstly in terms of eligibility, and obviously this may vary between lenders as we go through the next few slides. But in broad terms, it's proof of profits pre-COVID, i.e. the fact that you are a viable business, that the downturn you're seeing is due to the COVID impact, i.e. you were on a good trend otherwise prior to that, and obviously that you can afford the loan, and that when the business returns to normal post-pandemic, you'll generate enough cash for the payments as you go into that next stage. Next, please. So drilling down into some of the potential data requirements that the banks may require to support your claim. Clearly, the published accounts, and then more recent current management accounts, key performance indicators, and maybe some trend type analysis of behavior over time graphs, which is giving a real feel for the trend of your business, both pre and post pandemic. Effect of COVID on your sales and profit, in terms of sales, receivables, and any supply chain issues that you've been seeing. But importantly, a business plan, including a forecast P&L and cash flows. This is really going to be the key to demonstrating that you're going to be able to afford the loan facility. They may well want details of the assets, a list of the expenses that you intend to use as the loan to cover, and indeed probably also some idea that you've been doing what you can with other government assistance, such as the furlough rates or grants, and indeed your own cost actions, as to how to sort of keep the business propped up as well. Not that it's all just going to be as a result of a loan injection. They want to see a balance sheet, likely as at the 31st December of last year, and then potentially also some key customer and supplier information, just again as an input into how you're going to be operating the business through this crisis. But as I say, different lenders may require different levels of information. And just going back to the business plan, I think irrespective of it being potentially a requirement for the loan, it's something that as a business to get through this pandemic and beyond it, very, very key to helping you to run that business successfully. Next, please. So how to increase the chances of success? Obviously, an existing strong relationship with the bank can be very important here. You know, the banks are taking different approaches with this as to how they're managing all the applications, but for example, NatWest have actually assigned their relationship managers to deal with this. So obviously, if you happen to be with NatWest, that's I think probably a good plus point. Be realistic, not optimistic in terms of the outlook of the business, but be thorough in terms of the data and information that you be providing, because that's obviously going to impact the potential success of the application. Be aware of the sector trends and current restrictions in your particular operating sector, and communicate those effectively to the bank in your application if there are things that are important in that sector. And also, and we touched on it in the last slide, but identify the costs that you can control yourself and the actions you're taking on that respect. Use summaries, tables and graphs rather than a narrative, i.e. basically make it easy to input into their system. You imagine they've got hundreds, if not thousands of applications, and the easier it is to do that, the better it is for the application. But basically have a well thought through business plan with the cash flow forecast and an assessment of key risks around that and any mitigation to those risks. So basically show them that you really do know the business, the risks you're facing, and how to navigate through those risks. Next, please. So what actions should you be taking to mitigate the loss of the income or the profit? Basically here, you're proving that you're being proactive. What does that really mean? I mean, examples of it would be researching other routes to market. I mean, I think a lot of businesses have managed to do a lot of stuff online that they perhaps weren't doing before this forced it upon them. You know, research other geographical markets. I mean, for example, countries around the world are suffering this, but other countries are coming out quicker. Is that an opportunity for exports to that particular marketplace perhaps you haven't done before? Realign your staff costs, negotiate payment holidays and instalment payments, and then scale down some of the variable costs that you have in your business. For example, that would be user licenses, but there'd be many others, of course. And then obviously fully explore and utilize all of the government assistance within this pile of government initiatives that are out there. All of that will increase the chance of approving loan applications. Next, please. So how optimistic should the profit cash projections be? Firstly, I think the recovery phase, getting it back to previous pre-COVID sales levels, you know, be cautious about that. Don't underestimate the lag after the lockdowns are removed. I mean, the Chancellor even yesterday was putting out a speech, you know, warning of a very, very deep recession. Clearly, the economy, customers and suppliers are likely to take a long time to return to a normal bit. So it's important that you do take that into account. You may need to sacrifice margin to encourage orders, and payment terms may change for customers and suppliers. This is all part and parcel of that disruption that is probably going to continue quite a while after the lockdown actually eases. So again, that's why it's important to identify the costs that you can control and stay very focused on that throughout this, not just the crisis itself, but the moving out of the crisis. And then in terms of the cash flow, you know, do some sensitivity analysis, understand some downside risk pertaining to whatever your base case might be. Next, please. So what are the common reasons for some refusals in applications? Obviously, if you've had a history of losses and or, you know, large net current liabilities, that could be a reason for a refusal. Also, just taking on from where I left off there, over optimistic sales projections in the forecast, you know, do not exceed the current pre-COVID numbers too immediately, needs to be believable basically. Funds cannot be used to just repay current overdrafts and the like. And obviously, if you had a lot of other previous applications, yeah, that may also impact a refusal as well. Insufficient security, obviously, if it was above the 250k limit. And then the other important thing to recognise here is that algorithms are going to be used in the overall decision making. We've talked about all the other things we can do to increase the chance of being a success, but a lot of the numbers are going to go into some kind of algorithmic solution before the bank makes a decision. And of course, that can vary by bank as to exactly what their criteria are. Next, please. So be aware, no such thing as free money. These loans must be repaid. You've got to borrow enough, but not too much. It needs to be affordable for your business. Interest rates, of course, can vary amongst these different commercial lenders. As I mentioned, there's up to 69 of them now for the civils. So do a bit of shopping around. I think the counter to that, though, would be obviously that if you do have a very good relationship with your existing bank, that may well increase the chances of the successful application anyway. Recognize that the bank, will imply covenants to this loan, and obviously taking all this into account may impact the ability to borrow in the future. Next, please. How long does it all take? Well, things that can impact this are firstly going to be the amount applied. The banks themselves are going to have internal thresholds for that. Clearly, the BBLS 50 or less, it's got its own system and seems to be moving very well now. The next bracket would be the 250k, the one with no personal guarantees required, and then probably like to be $1 million, but obviously banks could have other guidelines within. Next important one would be the availability and familiarity of the bank staff to process the applications. As I mentioned before, I think NatWest have put their relationship managers on the approval process, so I think that has helped there. As we understand it, Barclays have put 2 centralised approval processes centres in place, and I understand also that I think HSBC are using some relationship managers, but they're moving them across regions to cater for to match up the demand and supply. If you're applying as a new customer rather than an existing customer, then there's obviously going to be some know your client type of checks going through. And just one other thing to mention there is, as you can imagine, with the amount of these applications going through, a lot of the major banks are being swamped with the level of approvals, and so they are actually prioritising dealing with existing customers first before actually taking on new customers as an application. Level of detail, level of data included. Obviously, you need to focus on quality, not quantity here. And then, the idea being the ability to overcome some of those algorithmic tests without further referrals. In terms of overall timing, I think the sort of what we've been seeing is in between 2 to 6 weeks for civils, whereas the bounce back more like 2 to 4 days. Next, please. So we've talked about the scope of the government initiatives and gone through some of the general guidance and the considerations. And in summary, I think what it's key to mention is that planning and agility are really the key areas throughout the disruption. So how to make use of these government-backed initiatives, navigation around them in terms of the access is key. Some of the application processes have been somewhat challenging, but I hope I've clarified what is available, plus some of the practical guidance to navigate your way through. Civils approvals were definitely proving a sticking point. It would appear that it's getting a little bit better as the weeks go by. And then obviously initiatives continue to evolve. It is important to stay abreast of those, listen to the news, look at government websites. They're updated very regularly if there are further changes. So very important to track that. And then another thing is that it's not really just important in terms of short-term survival during the disruption, but you really do also need to be addressing how to move the business forward once the pandemic has passed, and planning for that now. And to do that, obviously, you've got to stay very agile in your overall business decision making. lack of planning is basically a key reason why many businesses would fail. And obviously with the kind of pandemic we're facing, much more of a critical issue than at any other time before. So basically, prepare equally for that upturn, be ready for it. The businesses that will do that will no doubt be very well positioned to benefit from it as they move forward in time. So thank you, that's the end of my presentation, and I guess we'd be happy to take questions from myself or the rest of the team if you have any. Thank you.
Yeah, so we did have a few questions. So first one regarding furlough. If an employee is furloughed an agency, can they work elsewhere?
Yes, they can. Yeah. As long as it's with the permission of the original employer, they can work for other businesses.
Okay, great. Second question would be, do you know if there is a cutoff date to apply for the bounce back loans scheme?
No.
I was going to say, the other thing is, I mean, I obviously went through the high level details of these initiatives, but each of these are featured on the government websites. So if there's not a factor like that mentioned, then for now there isn't, but obviously these things can evolve as well. So.
Mm-hmm.
No, I think it's probably worth saying that the Bank of England have relaxed all their criteria that were imposed upon the banks and the financial crisis in 2008. They've relaxed that criteria, which enables the banks to lend a great deal more than they were able to, this time last year. So there shouldn't be a restriction as such. I can't see a situation where money will run out. Indeed, that's one of the Bank of England's priorities, is that the bank shouldn't run out of credit to lend.
Right, thank you. Then someone else asked if you could explain a bit in more detail the time to pay initiative.
Again, it's all on the government websites, but it's basically allowing you to pay, the tax, the associated tax later in the year, and then the VAT is allowing you to defer to June.
It's probably worth mentioning for PAYE, you do need to contact HMRC and agree that you can hold your PAYE back, and they will tell you how long they're prepared to let you hold that back. With the VAT, off the top of my head, they've said, or published, you can carry that over to next year, which can be a significant cash flow saving.
Right. Thank you. Next question is, does the bounce back loan count in your credit score?
I don't know whether that means if you're refused, does it count as a negative?
It's asking if it would affect personal mortgage applications.
If I've been assured by HSBC that a failure does not will not affect your credit rating.
Mm-hmm.
The terms of the bounce back loan are that there is no credit check done on either the business or the directors upon application.
Okay, thank you. Another question that come up regarding furlough: can a staff member be furloughed for 2 days and work for 3 days a week?
Well, I think what's happening is, in what's just been announced, that there is this idea of part-time working, part-time furlough. That's the change that's coming, and that's why the government is starting to say they're going to be looking for some contribution from the employers as they move into that phase. But I think that is yet to be clarified as to how exactly it will work. So I'd imagine there'll be further announcements in the coming weeks.
Yep.
Great.
But
Thank
obviously
you.
they're bringing that into place because they're recognising as the lockdown gets eased, there's going to be this, you know, starting to work, but it might not be full work straight away, and that's why they want to be able to cater for that situation.
Great. Next question would be, as a new company, can we apply for a bounce back loan, or would you suggest a start?
If you haven't got 3 years history, it's going to be harder. A bounce back loan, it's worth applying because that's an easy process. Sybil's certainly not, but bounce back is probably worth trying. It depends what the quality of that information is. If you've got if you've only got 2 years and the most recent year is profitable, then you'll probably get through that criteria on a bounce back.
My understanding with bounce back is that you don't need to show previous accounts. Then you can only borrow up to 25% of your turnover, or a maximum of £50,000, if your business has been in existence for long enough to have published accounts. If it hasn't been in business for that long, then you may estimate what your turnover will be during the next 12-month period and use 25% of that as being your maximum.
Thank you. So someone else is asking, so I registered in March 2020 the business, but was active since September 2019. Are these grants and loans available to them?
Unlikely to be. I believe that the magic date is the 1st of March 2020. The business needs to have been registered and in existence before that date.
Yeah. Sorry, I'm just running through. It's quite a few questions. So I'm renting a service office and pay business rates as part of my rent. Landlord has only passed on 5% reduction in rate. How do I know if I'm receiving the full relief?
It should appear on your rates bill. Every council is different on how they present their invoice. Some of them will actually be explicitly state that you got that relief and how much that relief is. But the golden rule is, if in doubt, ring your council. Don't pay your bill and ring them. Some councils are a lot better than others. In this area, Brent is being particularly slow, in my experience, but they're all different.
Okay, so I've got another question, kind of maybe related, might be similar, but my business occupies a self-service property in the city. What grants are they able to apply for?
Self-service, what do you mean? A kind of shared one? I mean, this might be something that fits into the new top-up, because I noticed the reference to that was businesses in shared spaces, market traders, small charity properties, or B&Bs, for example, that were actually paying council tax. But the other thing it mentioned was that there's going to be discretion for other businesses anyway. So I think the point is, there's something that's a little bit grey. It's certainly worth taking it up with the local authorities to see whether there's a qualification for that. But, you know, as I mentioned in my presentation, even the guidance to the local authorities is coming over the next few weeks. So it's going to be one of those areas that I think changes and evolves over time as well. But if you don't ask, you don't get. So.
Yeah, so whilst I advocate don't pay your rates, please continue to pay your rent because you don't want to be shut down. But yes, clearly more details will come out because the government have recognised that the original grant to be administered by the councils misses out a number of business situations. So be hopeful. I think there will be some assistance for everybody that actually has a premises of one kind or another.
So someone is saying, my business is profitable and I've been running for 10 years. However, my personal credit rating is rather poor. Will it affect an application to the bounce back loan?
No, is my short answer.
So the government again have made it clear that personal credit history is not taken into account when it comes to bounce back loans.
Okay. Great. How does the coronavirus future fund works? Sorry, the company is 3-year-old but have not received yet the seed fund to kickstart the project. But yeah, so I think someone is just asking basically a bit more details on the coronavirus future funds.
Well, as I say, the business to qualify, the business does have to have raised at least 250,000 in equity investment in the last 5 years, as I understand it.
Okay.
So you know you can be pre-profit, possibly even pre-revenue, but you do have to have had some equity investment come into the business to have at least got you to the stage you're at.
So here, does that mean that it could be used as match funding now? So in other words, if you were to find an investor that was willing to put £250,000 in now, could you?
Sorry, David, could you turn up your volume a bit? We're having trouble hearing you when you speak.
Okay, then so my question was then, would it be possible to gain investment now, and as soon as investment has been raised, apply for the future fund as a match fund to that, or does it need to be historic investment that's been received?
Well, that's a good question. It just says in the last 5 years, so I mean, I guess you could read that either way, but I think it would have to be tested.
Okay, and last question. Someone is saying they applied for and was granted a 25k bounce back, but looking at the criteria, they could have qualified for the full 50k. Can they go back for an increase?
My experience is they can't unless they've still got that initial 25 and can repay it. So if you've realised very quickly that whatever you received wasn't enough, quickly contact that relationship manager. Say, you know, I will repay it instantly. Can I make another application? And that's quite a common circumstance over the last week.
Okay. I think we're gonna keep on going with the presentations now. If we haven't been able to reply to your question at this moment, sorry, we've received quite a few. We'll try and go back to you later on. Yeah.
Is it?
John?
Is it? Yeah, I was going to say, is it Stephen next from Evoke?
It is.
I thought it might be. Again, Stephen, thank you very much for speaking with us today. Hugh, excellent. I learned a great deal as well, and I thought I knew a bit, but yeah, thank you very much indeed. Stephen from Evoke, introduce yourself. Over to you. Please take it away.
Thank you, John. As John said, I'm Stephen Reed. I am one of the finance directors from Evoke and one of Hugh's colleagues. I'm going to focus this particular part of the session on what you can do for yourself. Loans are very alluring, particularly when they are being offered with what appears to be fairly limited conditions at the moment. but as Hugh said, they have to be paid back. And so whilst it's very easy to grab a bounce back loan now, it means that when you get to the end of the first year, you are still looking at £900 a month or thereabouts to pay back. So you have to be certain that before you go into looking for a loan, you look at what else you can do for yourselves. And I want to focus particularly on the areas that do not involve loans for this session. Next slide, please. Thank you. Now, Hugh's covered this, so I'm going to whiz through this very quickly. This is a recap of some of the basics, but these are a recap of the areas that are not loans. These are things that are available to you now. Now, again, as Hugh has said, there's sick pay relief. You can get a business rates holiday if you're in certain sectors. You can defer your VAT and self-assessment tax payments. That doesn't go away, but it doesn't mean it helps your cash flow. You can apply for self-employment income support. Hugh has touched on grants. There are several available, and I'm sure John will come back to those later. They apply both for small businesses and for the retail, hospitality and leisure industry. Again, Hugh touched on the furlough scheme, which is critically important, and John will talk to you about the Innovate UK grants in his session. Now, it is important that you make sure that you are taking advantage of all of those, because those are not loans, those are things that are there to help you now. It is also worth checking whether you have any cover under any of your insurance policies. Now, it's unlikely because most insurance policies don't cover it, but some do. So it is worth actually just checking before you pass up that opportunity. And if you haven't already done so, you do need to push back on getting payment holidays for things like your rent of your office, if you have one, or your lease. Some landlords are playing hardball on this. Some are being supportive, others are doing all sorts of things, including threatening legal action and all sorts. But you do need to engage with your landlord, and you need to try and push as many payments out that you do not need to make. Now, that will be things down to even things like photocopy machines, or if you're in a healthcare scheme, or you're paying your insurances or loan repayments. Talk to anybody where you have a payment, a regular payment going out, and find out whether you can get any relief in the short term to help you with your cash flow. Next slide, please. Now, in terms of people, by this stage of the coronavirus pandemic, you should have already taken these actions, but I will whiz through them again in case there's anything you're not doing. The senior people in the company, and I appreciate that some of you will be sort of 1, 2, 3 person companies, but those people have to shoulder the heaviest burden, not the staff. And so they have to take the heavy lifting in terms of the salary reductions or salary holidays. We've spoken lots already about the furlough scheme, but if there's any people you need to furlough, then it's important that you do it if you haven't already done so. What might be interesting is the next point as well. Looking forward, we all expect to come out of this, but we're not sure how quickly. You cannot keep racking up costs in your business if the uptake on return to normal, if you like, is going to be slow. Now, if you have to make staff redundant or restructure the company, which I'll come on to in the next slide, you might want to look at the furlough scheme to mitigate the cash impact of the redundancies, because you can go through that process now. If you have any outsourced services, then you should stop them, or at least renegotiate the payment and push any payments out. And it's unlikely, I know, but if you have got any subcontractors in the business, or you have any temporary workers, then make sure that again, those are set aside unless they're absolutely essential. And again, this is pretty obvious, but if you are undertaking training or recruitment costs, or you have any of those things, then again, those are things that you can actually start to push aside for the time being. This is if you're trying to preserve cash and you want to make sure that you're not spending anything you don't need to. Next slide, please. Right. Now, the top one is the most obvious, of course, but it isn't actually. Some things people think are essential. You need to actually look at what is essential. Is it going to change anything or make a difference by spending it now, or can you push spend off until later? You need to go through your debtor book. Most companies have sticky old debts that they can't sort out. Do deals if you can't unlock them. Actually try and pull in as much cash as you can, and it is worth doing deals even if perhaps it's not what you need. It's better than sitting on money that's outstanding ad infinitum. It is worth again renegotiating payment terms with your clients. If you've got clients that are bigger than you are, who have better cash flow situations or better access to cash, it is worth talking about things that will help you. Maybe you give them a discount for faster payment terms, but it is worth embracing those kind of discussions just to see if you can get a situation where your cash comes to you faster. I would suggest you do the opposite with your suppliers if they're big enough to sustain it. Sometimes they are, and you might be able to push your payment terms out without damaging your credit rating or having situations where people are chasing you for outstanding money. And depending on the market you're in, you may even be able to do things like sale or return. Obviously, that doesn't work for everybody, but it depends on the industry you're in. The next bit, if you haven't done it, again, it is worth dredging through your invoicing. Is there anything you have done that you haven't invoiced? It is worth going through thoroughly and make sure that you account for everything. These are great times when you're sitting at home and you're looking for ways to make the business more liquid, if you like. Go through these things and check what you haven't invoiced. The next thing is, if you're a project-based company, invoice the day the job is finished. In fact, even if you're not if you're a service-based company, do that. You know, there are builders and plumbers and all sorts of people out there at the moment who don't send their bills for a couple of weeks till after they've made a visit. If you're one of those, get the invoice in that night and set fast payment terms. If you've got redundant or slow moving stock, look at whether or not you can move it on, maybe even fast sale it, but again, realize cash. And then you need your own cash flow forecast. Even if you're a very small business, you need to know what's happening with your cash. You need to have a simple cash flow forecast that you can update daily. It takes 10 minutes on your screen at home to do it, but it is worth doing it every day. Next slide, please. Now, this is important. All we've talked about so far is being in the middle of this crisis, which none of us want to be in, and all of us are hoping will be over quite quickly. There is at the moment no great sign of that, and so we have to be on our mettle about getting back into business properly as quickly as we can. So you need to stay visible and active in all of your marketing channels, whether that's social media, whether it's in local press, however you do it. You need to stay active on it. That's one area you do not want to save money, because that is your lifeline to getting back into business properly. You need to keep your eye out for opportunities. Is there anything that you can do now that you're not already doing? Is there anything you can change in your product or service that better fits to the current climate? And it is worth, again, racking your brains or talking to those closest to you and just having a brainstorm and seeing if there's anything you can do that actually makes your product or service attractive in these current times. It is worth offering discounts to clients if they have projects. And again, if you're talking to bigger companies and they have projects in the future, there may be some benefit to everybody to see whether or not you can negotiate bringing those forward. Again, it's a conversation. Some companies will not be able to do this, others may have a chance. And negotiate about upfront payment, or at least, you know, payment within 7 days or 14 days, but a lot better than you would normally get. Review your entire cost structure. I talked to someone yesterday that has a fairly large office. In these current times, people are used to working at home, and it's unlikely they'll all flood back to the office at the end of this. So have a look. Do you need the premises that you've got in the long term? Can you be more flexible? That'll cut down the related overhead with that office. Could you outsource anything and slightly restructure your people in your business in terms of how they might work? Some may actually prefer after this to work part-time or 4 days a week. So have a look at all the options. There are ways that you can be creative by thinking about how you run your business. Finally, on this slide, if you're doing well in this situation, and some companies are, then can you do any better? Are there competitors that you can take out or merge with or do something? There are ways to be creative here that will help you improve your situation, and it's particularly true if you are doing well in the current climate. Even mergers cut down overhead, but create revenue. So next slide, please. Now, I want to just finish on a couple of slides on funding options, because again, I've tried to stay away from loans here and look at what you can do for yourselves to stop you having to go down the loan route. Now, invoice factoring is a good option for small businesses. Many of you will be familiar with it, but for those who aren't, basically the invoice is sold to a financing company or a specialist lender or your bank, and that factor buys the invoice and pays up to 80% of the invoice value immediately. So 80% goes straight into your bank on day 2. Now, there are significant benefits of this. Obviously, the immediate release of cash into your bank is the biggest one. You also, to a degree, outsource your debt collection, but I will mention that under cons as well, because there is a problem. There's a downside as much as an upside on that. But in the short term, you outsource chasing of your payments, and it is easier and faster than arranging a loan or an overdraft facility. Now, the only downsides of this is that you remain responsible for unpaid invoices, normally after 90 days. You will either have to replace that money that you have been afforded by issuing other invoices, or you will have to pay the lender back after 90 days, and you are responsible for collecting the cash. So it is not open-ended. It also depends to a degree on the credit rating of your end customer. If the factoring company does the checks on your customer base and finds some of them are poor payers, that will influence their decision on whether they want to offer you invoice factoring. Just before I come off this slide, one that I meant to put in last night, but I'll mention briefly to you, there is another thing called invoice financing as well, which is slightly different. It is basically, it's like accounts receivable funding. You only get a percentage, though, of the invoice, and you have to cover the remainder of it yourself. But the finance company in this case will do all the chasing down of the debt, and when they get the remainder part of it, they will then will factor back to you, if you like, the remaining part of that that cash. Now, whether it's factoring or financing, of course, there is a fee payable that normally is between 1% and 5% of the invoice value. So there is a cost to doing this, but it is a very useful route if you want to access cash immediately, you raise invoices. Next slide, please. If you are slightly larger, or if you're capital intensive, then another option is asset-based finance. And this brings into play equipment and stock, as well as invoicing. It is very similar to a revolving line of credit or an overdraft facility, if you like. Most of the finance companies will advance 80 to 90% of the total value of equipment, outstanding invoices and assets. So this may be useful if you are in a capital intensive business. You will need to fill out a borrowing certificate, but it is still quicker than applying for a loan. So again, that may be for you. They're slightly different. You need more money, and you have stock and equipment. It's something worth looking at. Next slide, please. I think you may be relieved this is my last slide, but I'm going to go through some funding options here that are simple measures that you can take in your business that cost you nothing but can preserve your cash. One is about improving communications. Get your staff involved in taking over part of the debt process. This is really important. So often accounts are not chased, and if they are chased, they're chased by somebody who really is just kind of ticking a box. And I don't mean that in a derogatory sense, but they're not invested in actually the debt collection itself. Now, the people who are dealing with a client need to be the ones that are involved and actually working with the client to release the cash. Something I've used on many occasions in the past is agreeing draft invoices in advance. I mean, particularly if you're a service business. Talk to your client, send them an email of the invoice and say, I'm planning to invoice this tomorrow. Make sure we're okay with that before I send it. And then you don't get this bit 30 days later when they said, oh, I didn't agree with that. And then you start all over again. Improve your debt collection regime. That means stay on it and make sure you are following up and you're sending letters after 7 days and so forth. Make sure you do not let them get away from you. Offer early payment incentives. I mentioned that on the last slide, and that's something you can do. Talk to clients about giving them better terms if they pay early. Negative interest rate sounds easy. Sometimes it isn't, but it is worth making sure your terms and conditions include your right to levy interest rates, and make sure you do it. Consider using more automated processes. There's plenty of invoice management software out there, and you can send it electronic invoices. It saves time, it's faster, and gets your invoices into the system much quicker than a manual process. And as I said earlier, invoice as soon as the job is done, don't wait. So I hope you found some of those tips helpful. They are things you can do for yourself and that do not require loans, but will make you more efficient going forward. Thanks very much.
Thank you, Stephen. Virginia, for questions now.
Yeah. So not too many at the moment. Someone's asking, which invoice management software would you recommend?
Oh, well, that depends really on your business. I think Robert may already know some that he uses. You're on mute, Robert.
Robert.
You're on mute.
Yes, Lloyd's have a very good system where you can manage it yourself. You can upload your invoices and you can draw down against that debtors book. That is, it's cloud based and it's pretty simple. So that extends to throughout the Lloyd's group.
Great. And the only other question I've got basically is asking if you guys do invoice factoring and asset-based finance.
No, we don't. There are many organisations that do that. I would suggest that what you do, your bank will do it. There are some sharks in the business, so you need to shop around carefully. But if you know other people that you work with, other companies that you work with, it might be worth getting some references or referrals in terms of who they found useful. But certainly you can access a whole list of these people on the website quite easily. Just make sure you do the check, because the interest rates change between the lenders. Some of them are what should we say, a little more vicious than others. Some are easier to work with.
And I would always advocate asking the provider of the service to give you what they would consider the closest match to your business as an existing customer, so that you can ring them independently and ask them what it's really like using it, and the restrictions that are applied to which customers they will back and which ones they won't.
Perhaps we could have the next slide, and then we can just talk quickly about how we can help if anybody has any specific issues.
Sure. Let me just.
So, from my point of view, so I'm David Seaton. I'm one of the directors at Evoke. Thanks to Stephen, Hugh, and Robert for giving up their time this morning. From an Evoke point of view, then we're helping a large number of businesses at the moment to access the funding that they need. And are on hand to offer support to everybody who needs that. On the screen at the moment, there's an example of how we do that. Then next slide, please. But in the first instance, then we prefer just to chat and try and help, and we offer a free 30-minute consultation. Which, as an entrepreneur, I strongly suggest that you take up. Not much is free in life, and having access to the caliber of the people that you can see on your screens for a 30-minute call is verging on priceless. Then, if you'd like to do this, then there is a link on the screen at the moment to a form that we would like you to fill in, which just asks you a few questions around your funding requirements. And we will then be in touch to arrange that 30-minute call with one of our guys. I think that's it. Then my contact details are on the screen. If you'd like to email me directly with any particular questions about the presentations, then please do. And from Evoke Management, thank you very much for listening, and enjoy the rest of the webinar. And I'll hand back to John.
Well, thank you very much indeed, David, and thank you from me for the Evoke team joining us today. I've really appreciated it. If you want to stand around for the next half an hour, you're more than welcome. But we're going to move on now, I do believe, to the government section, which is understanding government SME support in COVID-19, grants, R&D funding, where to look, what information you need, awareness of pitfalls. And my name is John McEwen from Accelerate Funding. Next slide, please. I think at the end of March, when COVID-19 hit us all, nobody quite knew what was going to be happening next, obviously. But what was very apparent very quickly was that a lot of investor support for SMEs was dropping off a cliff. In fact, I was with the Director General of the EIS organisation doing a joint seminar, and he said at the end of March into early April, a lot of businesses that required cash flow, that had part-funded rounds that were still open, had signed contracts, their investors were just removing themselves away very quickly. The angel market, the investment market went dead, and therefore the government came out with all of these support measures that our Evoke management team have been talking about for the last hour. But also the government had another side to their solution, which was looking at grants that they've been issuing, R&D tax credits, and the cash flow of them. So I'm going to spend a few minutes now just talking about what the government has been doing, what it is still doing, and why you must pay attention because I think, as Hugh said, this is a fast-moving environment. And whereas before in my business life I could do presentations year after year that hardly changed, I've been having to keep up to date with so many changes in recent legislation, as I'm sure the whole panel has. And so no matter what else you get from today, I think it is you must keep up to date with the changes. Can we go through 2 slides, please? I think because you already covered the grants for rates. So next slide down as well, please, Virginia. So yes, grants are very fast moving, and the first grant came out a few days after the lockdown, after the removal of resource, and it was a COVID-19 grant for societal needs. And actually, it was a 100% grant for £50,000. The point of this grant is that it finished 20 days ago, and we're still waiting for a new announcement. We don't know what's going to be happening, but the reason why this grant was interesting was because it was a £50,000 grant that did not need repaying. As long as it was related to issues to do with COVID-19 and industries affected, which I'll come on to next, then many businesses applied for it, and the threshold to qualify was significantly lower than in a normal Innovate UK grant. In other words, on here we call it TRL, as you'll see there, not TRL related. The level of proof you required to get a COVID-19 grant, which is now closed, was quite low, and you had to do a real poor performance on your grant application not to get it. We were fortunate that we had quite a few customers wanted us to do it for them. It wasn't expensive. Some of them were doing it themselves and more making errors, and it was the errors that they were making rather than the essence of their business that was causing them issues. I think, again, as Hugh said, it was all about people over-egging what they were trying to do, as opposed to saying, look, we're being affected by this. And one thing is I will come on to is, in grants, especially Innovate government grants, should you write it yourself or hire a writer? And it's always going to be a commercial decision. And we're still waiting for the next iteration. Yes, please, Virginia. So the COVID-19 grants, which are now closed, were looking at a very, very wide variety of industries and saying, were you suffering from the effects of COVID-19? Retail, social care, financial services, couriers, community support services, hospitality, the whole range of industries that the government was trying to cover them were huge. So please, you need to keep your eyes out always for UKRI on the UKRI website, which comes part of this presentation. But we are looking at a next iteration of this, but we just don't know when and if it will happen. Can we go down again, please? Right, so what we do know is, going past the £50,000 grant, we have got a grant that did come out about 3 or 4 weeks ago called Ideas That Address COVID-19, and it's open until 2021. And the project's a sort of 18 months duration, and Innovate UK, via this particular scheme, will cover 80% of the full economic costs of any project to do with COVID-19. Now, look, the government's going to be looking for things that are directly affected by COVID-19, health, social, economic, cultural, and environmental. And they're looking at what it is, the technology that you're developing that is going to reduce the impact of the outbreak. And the data that they collect will be of critical use. It's been really interesting for me in the last 3 or 4 weeks because there's been 3 particular SMEs involved in technology that have pivoted their offering from being something else into COVID-19. I'm under a number of NDAs, so I can't discuss, but what I can is a company that was tracking its workers across the world that were operating in difficult to reach regions. So they had an app, for example, that could find out where somebody was at any time in the world, warn them of any particular dangers, get them out, monitor transport. In other words, real close protection and real close information to track somebody in a difficult environment. They are already looking at how they can pivot that app into COVID-19 to see how it might help hit the government target of the track and trace of people from this pandemic. So it's just an idea, but there's been 2 or 3 I've seen where we're seeing technology firms with products that have pivoted towards COVID-19 and the issues that can be addressed. The best thing about a grant, most of all, by the way, for any of you, is that it's not got to be repaid and it's unsecured. And I'll keep that going as a theme throughout. So far, we've had 2 grants coming in. One is already closed. That was the 50,000 COVID-19 version 1. The COVID-19 version is open. It's substantially larger. There's no real limit or minimum limit on the amount of money you can apply for. The government will cover 80% of costs. What we're looking for is addressing issues directly related to COVID-19, societal issues, as seen in the last slide, and then we're looking at the ability of companies to pivot what they're currently doing and saying, has this got a use in terms of getting COVID-19 solution, and have we got new markets available? Can we move on to the next slide, please? And so the government has also issued a new Innovate UK grant, what we call a smart grant, which opens for trade on the 28th of May. And the project sizes, again, are 25,000 to 2 million. It doesn't matter if you're a new business, by the way, as long as you are an SME. It doesn't matter if you're pre-revenue or you've been going for 1 year. What the government are looking for is what it is that you're trying to do. What is the team like, and should you be applying for one of our grants? Now, the grants can be done by yourselves or in collaboration, as in hardware with software. But what they're looking for is a deep-seated pain that you are resolving in your application. What is it that you're doing? If what you're doing is just a good idea, the chances are they're not going to look at you. But if, on the other hand, that you've got something which is going to solve a massive issue as you see it in society, then they may want to hear. They will ask again, why is it that why it has not been solved so far? And then again, you know, what is the concept? What's the disruption? What's the solution? And what is it that you propose to do? They do want to see you trying to make some serious advance in the science or technology to resolve a deep-seated issue, and they will go to 70% of the cost covered. The average size of grant we see for this is around about 200 to 300, 400,000 pounds. They're not small. Don't go for the small ones. That's another subject. But they put 25 million pounds in this pot to share, and there's 3 months now from the 28th of May to apply for it. Now, part of all of these things is like all government initiatives, you can apply for this yourselves. It's 10 questions. You can do it online. The question is going to be for any business thinking of applying for this free money, unsecured, without having to pay it back money, is that should we do this application ourselves or use a professional writer? Now, professional writers cost money, doing it yourselves don't. But you have to look, therefore, at what your chances of success are. Realistically, even 3 or 4 years ago, if your grant application scored a 70% mark when it was assessed by Innovate UK, the chances are you were going to get it. However, fast forward 4 or 5 years, we now live and operate in a very, very competitive environment. Consequently, the benchmark to pass has gone well past 70, is now probably in the low 80s to mid 80s, and is competition. In other words, if somebody scores 83 and you score 82, it'll be the company that scores 83 operating in the same area that will score and get the grant. I was talking to a couple of doctors yesterday. I love their tech. It is disruptive, but they decided to do the application themselves. They'd scored mid-70s and had been rejected. So they've asked people like us to go and review. It's a commercial decision, though. Good writers are not cheap. I'm raising that because you would need money up front to go for a grant because they are kind of inundated with work, but that's a separate subject. But again, finally, grants are a very, very movable feast, and please keep your eye on them. Can we go down the slide, please? So the pros and cons of grants. Well, we've already seen with the rate grants that Hugh mentioned earlier on, that 51,000 is the maximum value, and we don't know if they're going to carry on or for how long once the initial term has elapsed. So therefore, harder to plan. COVID-19 grants, we don't know if there will be another fund to be announced. Innovate UK grants, competition disruption. There is no point applying unless you are solving or attempting to solve a significant problem, and whereby the societal impact, the economic benefits, the financial benefits are worth the government considering looking at. Cost of writers, or write yourself, grants and also R&D tax credits, which I'll be coming on to. But of course, with a grant, you don't have to repay. There is no equity dilution. And with a grant as well, there is no guarantee of success. So again, it comes down to the effort required and should I really be doing it. The name of the website I was talking about to have a look at and keep your eyes focused on is the ukri.org. It's a very fast moving environment. Keep checking. And I haven't mentioned other grants like the Northern Powerhouse, the Industrial Strategy Fund, and I haven't mentioned the European Horizon 2020 programme. What I'm trying to give you all in all is a picture that the government has said that grants are there. They will come and go. You've got to decide, is it for you? You have to work out, is your technology that you're trying to develop or that you could pivot going to be sufficiently interesting for government? What I would say is that if you can pivot your technology, or your technology is already into the COVID-19 area, it's worth finding out more anyway, because they're making that much more generous. But grants are good. There's no end of money. Do not try and apply for one 4 weeks before the end of a application date. Any good writers by then are up to their eyes in research and trying to produce a document. They're not going to take you on. You've probably left it too late. If you are therefore thinking of the SMART grant on the 28th of May, you realistically need to make up your mind and talk to experts or within your business and give it no more than 6 weeks before you apply or think about starting the work required for an application by the 28th of August. I'm going to close down on grants now and just move on to R&D tax credits. Thank you. Next slide. Okay, so been going since 2001. We don't mind if you're pre-revenue or loss-making, it doesn't matter. What we're actually looking for is the government is looking for money spent on innovation. And here's the thing, people say, I don't believe in free money. Well, I get you. But if you don't meet the grant threshold, the government also understands that what you're doing or trying to do may lead to jobs in the future, especially in technology. It may lead to new ways of working. It may lead to new technology. Consequently, look at the government as a bit of a bank making an investment. It's saying to you, we're not going to give you the free money that you would get from a grant, but on the other hand, if you're trying to do something new or different, if you're trying to innovate and looking at technical challenges and uncertainty, then there's a chance we might want to back you. So look at what it is. What is your USP? Why are you going to survive when somebody else doesn't? Why did you start this business? If it's technology driven, that's really, really, really interesting, because the government's also saying to you, look, we don't care where you are on your journey. We don't care whether you're losing money or whether you've not even started trading. We may want to help you. Not only that, but whereas grants are for the future, R&D tax credits looks back. It says, what were you doing 2 years ago? And into this year, into your third year as well. Were you loss making then? Were you failing then? Were you trying to develop your solution then? That's what we're looking for. And we can get up to 33% back of what you've spent. Therefore, if you say spend, I don't know, £100,000 in wages and your pre-revenue or loss making, you're going to get a check. Believe it or not, the government thinks this is so important that they've got a 5-week, roughly a 5-week turnaround time on applications, so that they get that money into you, because they recognise that now is when you need the money, not when you're trading and have lots of traction further up the road. Oh, by the way, they also love failure, because failures prove positive that R&D has been undertaken. The main costs involved, I'm not going to go through the detail now, but we're looking at employees, subcontractors and materials. We're looking for people involved in the project, directors' time. We're looking at testing, the architecture, the build, the MVP. All of these things we want to look at, and the costs involved to enable you to make an assessment, or us to make an assessment. But finally, you've got to be a limited company. If you're an LLP, a sole trader, or a partnership, you're not going to get there. Also, very, very critically, dividends will not be included. And right now, dividends are no good for the furlough scheme either. Hugh, again, I think mentioned that. Dividends are no good for the furlough scheme. So bearing in mind they're not good for the furlough scheme, and going back to Stephen saying they're no good for loans and why are you doing loans anyway, then effectively, you've got to look at the role of dividends, I think, not only now, but moving forward. They're no good for your credit score, they're no good for your R&D claim, and they have limited use in many other, in the furlough scheme and other areas. Can we go down, please? So what is an R&D activity? It is something that is kind of new or improved. We're always asking, what is it you're doing that's different? Is it cheaper, faster, longer, shorter? Is it stronger, lighter, better? All of these things that businesses get involved in, and we're always thinking about why they're doing it. And most often it's because they're trying to get competitive advantage. So we're saying to them, what is competitive advantage? But rather than me harping on about that, I thought I'd give you 1 or 2 examples that I've seen personally in my 10 years involved in this. The first one I ever did actually was a dentist chair for obese people that could bend at the end, so they could actually jump onto the bench. That at the same time had to carry 30 stone and be wheeled in and out of a dental surgery. And they also got a patent in that. We also did a hospital uniform dispenser that had to be speeded up to cope with an increase of to 3 shifts a day of 1,000 people signing in and signing out of a hospital, whereby we could get a top and bottom together that fitted, that could centralize the coat hangers in one place as opposed to around the floor, and could move at 4 meters a second as opposed to the old slow way of 1 meter a second. And also a byproduct of that was that the developers also came up with a chip, or a biochip, that went into the side of the machine with your size and weight, that then gave you 1 credit, and that 1 credit, once used, you couldn't get another uniform. At the end of your shift, if you tried to put the uniform back, it was a piece of paper, because you wanted to steal the uniform, it took a photograph. So therefore their losses went down considerably. That was another part of R&D. We had another one, plastic scaffolding, stronger than steel, lighter than steel, and yet could be recycled when damaged. That's proved popular. Whether it's in production or not yet, I don't know. And finally, probably my all-time favourite was the water butt, which was a designer, an engineer. His water butt was blocked, so he went to B&Q, tried to buy a new one. Ben couldn't get it in his car, so he went away, redesigned the water butt, made it fit into 4 parts. He understood that the bottom tap always had sludge, so he put 4 taps on the sides, pulled it from the bottom, massively re-engineered, got a patent, and that was good. My very last one was software V1 to V2. Software is a huge area in R&D, and if you're involved in software, that's all very interesting. We actually had a PPI company claim. We did a claim for a PPI company, funny because they went from having 5,000 clients a month under the PPI regime to having 40,000 clients a month, and they spent £500,000 over 2 years trying to massively improve the process of a broken system. In the end, they succeeded. It was a major piece of work, and I think they got back around about £125,000. So R&D is not sector specific. It's not It hasn't got the same level of proof as a grant. It's very wide open. Doesn't matter if you're making losses, doesn't matter if you're pre-revenue, as long as we can see you're trying to meet some government guidelines and showing you're trying to do something new, better, cheaper, faster, in a more efficient way, then it's worth considering. And it's money that's already trapped up in your business. Next slide, please. So I suppose it's very rare you see a product come into its right time and right place. But 5 years ago, I did the first ever bridge of R&D tax credits with NatWest Bank. It was a brand new product. They were trying it out. And there they were lending money unsecured to loss-making and pre-revenue businesses. Banks don't really understand that. And actually, NatWest didn't stay around too long, but we developed the processes for them. However, in both R&D tax credits and grants, we have had an evolving market now that allows us to bridge the money you may be getting. So, for example, in R&D tax credits, normally you wait till the end of the year, then a report is done, and then it's submitted with your accounts. So you could be waiting up to 5 or 6 months before you get the money that you are owed. And if you're pre-revenue or if you're making a loss, it's quite a long time. We can now, with the right report, get that money into you at the end of your tax year. Further, if we can see good compliance and good governance, again, the things that the panel were talking about earlier, if we see good compliance, good governance, good cash flow, good management, then we can get that money into you perhaps up to 7 months into your tax year. So well before the end of your tax year. So it's all about cash flow in terms of R&D, and how do I get access to this money now that I might need for new hires, for my marketing, for all of my other areas where I'm trying to bring in, trying to get in cash now rather than wait. The second area is with grants in itself. As far as the grants are concerned, we were never able to bridge grants, but now, even in the past 4 weeks, products that were out there have now come into the fore, where a grant is awarded. Let's say it's 100,000. Normally, the business has got to find the first 25,000 of that. We can now fund that to 12,500. Again, unsecured. Again, without PG. Further, after the first quarter and the audit and the money has come in, we're able then to bridge or get the cash out to you. But then we can look at the balance of the innovation loan, or the innovation grant, sorry, which is a further 12 months, and we can get that money into you as well at the end of the first quarter. So again, if we can see good compliance and good audit, if we can see a good business being run, if they're qualified for an Innovate UK grant, but they're short of cash flow, then we can look at ways of getting that money in now to let the business do what it needs to do, as being another way to help them. That's on the grant side. On the R&D side, it's going to be a case of we can get money now because it's the end of our tax year, or if we're running a good business, we can get that money in unsecured month 3 or 4 into a tax year. It's all about cash flow. Can we go one more down, please? I put this in there, deal breakers for R&D and grant bridges, just in case any of you were wondering. But it goes back, I think, to what Stephen and Hugh and Robert were also saying. Things they don't like, as much the same as equity markets or loan markets or anybody doesn't like. They don't like HMRC arrears, lack of shareholder support. We need to see a good company. Hockey stick forecast always makes me laugh. We don't want to see anything which is untoward. Please don't do it to us. Don't like existing debt. And as far as the R&D bridges are concerned, they don't like R&D claims. Can we go down one more, please? Okay, before I finish, I just want to give a quick mention to one more government incentive, which came from one of these webinars 3 weeks ago, and it's called Patent Box. And Patent Box says quite simply that if you have got an income stream derived from a patent that was granted in the UK or some European country, then effectively, as long as we can isolate the income stream deriving from that patent and take a few bits and bobs into account, then effectively the corporation tax payable on the profits from that product that contains the patent can be as low as 10%. If you can imagine, my hand right now, strangely enough, is a computer cartridge, but I also sell the printer around it, then effectively it's the whole thing on a worldwide exploitation, distribution or licensing that can get into the patent box. I didn't mention this before because I didn't think it was relevant, but I was told by a chap after one of the seminars run by the DIT 2 weeks ago, they'd made £500,000 profit. All of their stuff had patents in it, and they'd never heard of patent box. As a consequence of that conversation, we are now probably going to save him in a region of 30, 40, maybe £50,000 once everything is taken into account. So, government support on grants, COVID-19, Innovate Smart Loans, cash flow grants, cash flow R&D, a whole plethora of ways the government's trying to help. Thank you very much indeed. Get hold of us if you need us. I'm done, Julia.
Okay, there's a few questions for you. And yeah, if anyone's got questions for John, please just type it in your chat box now. But someone is asking, so if they have applied for the initial 50k COVID-19 grant, can they still apply for the Smart Innovate UK grant that opens on the 28th of May?
I see no reason why not. Robert, do you have a comment on that?
I agree. I can't see what anything preventing an application.
I will say this: the level of proof of worthiness of an Innovate grant is considerably higher than the initial COVID-19 grant.
Okay, great. Thank you. So next question: how much roughly do you need to have upfront to apply for a grant?
Well, you can apply for a grant anywhere from 25,000 to £1.5 million. As you can probably imagine, the work required for a £25,000 grant is significantly less than it is for £1.5 million. I would say the average I've seen has been between 5,000 and 8,000 in 2 stages up front. Has been a minimum requirement. If you decide to get a proper observer, writer, they're very academic, they're very clever people. They live in boxes mainly because they don't like talking to people, but they're not cheap. So, you know, we wheel them out when we think there's something they're interested in, but they're very strange people, but they do like getting paid.
Okay.
Case by case basis.
Mm-hmm. And the next question is, what is the typical cost of grant writers for grant applications?
Yeah, so it's the same as the last question. You know, you need a few £1,000, to be honest. If you've done a hell of a lot of work yourself and you're looking at revising an application that's failed, then considerably less. Basically, it's a case of the size of the project. I would say that of 8 pitch decks that come across my desk, even looking for an Innovate UK grant, smart grant, 8 of them don't get past even first muster because they're not going to pull the criteria of solving the problem, of resolving the pain, of having good enough technology, being disruptive enough and attractive enough for government to want to get involved.
Okay, great. Thank you. Someone's asking, can you apply for both a grant and R&D tax credits?
Absolutely, but you need to be very careful. You get a bit black belt now because you need to ring fence. The R&D scheme has got a generous scheme and it's got a less generous scheme. A grant puts you into the less generous scheme, and there may be elements in your R&D that do not affect the grant. So we have to ring fence the projects in order to maximize your claim. It's not unusual to have a generous claim and an ungenerous claim working in tandem. But you do honestly need to know what you're doing there.
Okay, great. Next question is, do technology solutions aimed at an international market qualified for Innovate COVID grants if they still address issues raised by the COVID-19 pandemic?
I see no reason why not. As long as we're looking for UK-based businesses really, and then the rest is a case of where you're at, where you are. Should you be talking to Evoke about, you know, the bounce back, the bibble or the sybil, and then also looking at potential grants that may be available to you, because grants are actually not only UK-based, but I didn't mention the European grants as well, which you can also apply for singly or in collaboration.
Great, thank you. Do service ideas qualify for R&D?
More detail required. I would say unlikely. You know, us people that do services like the panel here, we're kind of quite dull people and we don't really have much imagination. We tend to more interpret what's being done and give services to technology rather than do interesting things ourselves. However, I would say if somebody on the panel had to redesign or re-engineer a system which involved technology, that would be different. So it's a case of where does the technology fit in what you're trying to do.
I would add to that, John, the use of artificial intelligence that would actually reduce the labour content of the service that you offer. Maybe.
I can only agree with that, Robert. I mean, if you look at buzzwords right now in grants and R&D, it's AI, it's blockchain, machine learning, robotics, sustainability, environment, built environment. These are all batteries. These are all very trendy words right now. You know, 6 years ago, the trendy words were apps or websites. Now, all of these things now have changed considerably. It is a moving feast.
Great, thank you. Next question. So I am an SaaS-based telehealth company. So a startup providing services. They have developed a platform without any outside investors and don't fit any of the criteria for funding or grants. And they're looking to scale up the platform. They're asking what are their options?
I'll do that first. I'd like the rest of the panel though to put in their input if I could on this one, please. My thing is, if you've had technological challenges developing your technology and you've had to do things that were not on the shelf, then the chances are you do qualify for R&D. I'd say to an outside view right now that you get grants. I'd have to look at it in more detail, but those would be things that I personally would look at. Panel, please, anybody?
I think the phrase "scale up," the obvious one is attract external investment, and Evoke can help you with that. And then there's, you know, simply getting a normal commercial loan for your enterprise, which if you can satisfy the needs that you can realize that future revenue might be a possibility. But it sounds like a case for some external investment.
Thank you. So your next question is, when doing a grant application, where is the, I mean, what should you focus on most when you're doing your application for a grant?
There's 10 questions on an application for a grant. The focus, look, if you don't meet the initial 4 questions of what pain are you solving and why has nobody solved it to date, what are you going to do that's going to disrupt and change that industry and that sector, and finally, how much money will it bring in, and what are the what are the societal impacts. Unless you're hitting the level of that requirement, my opinion is don't even try. And you know, you probably will qualify for R&D in the future. You may well qualify if investors are prepared to look at you, take a view, especially if you're not even an MVP, different again. But you've got to be hitting what the government is after. Look at the Innovate UK website, look at the UKRI website, but be brutally honest with yourself. Is what you've got a good idea, or is it necessary and vital? If it's just a good idea, I would personally say take a step back anyway. I don't know what Robert thinks about that, or Hugh or Stephen, but you know, I see so much technology and it's really, really nice. What's it going to do for anybody?
I agree with you, John.
Yeah. Thank you. Next question. How early in the concept can you apply for an R&D smart grant for the COVID-19 related?
Yeah, okay. So there's getting a bit more technical now. There's like 9 levels. They're called technology readiness levels. TRL1 is virtually a piece of paper. TRL9 means you've made it and you're well out there. You've scaled and you've gone right up. You've gone right up there and you've got it out. The government is interested, no matter where you are, between TR1 and TR9. I would say most of the ones that we actually get to and look at are perhaps the ones where you've gone past MVP, you're scaling, you want to go to the next version, you want to improve your commercialization, grow your team, all these things, and that's why you want to raise the money. But you've gone past MVP most likely. There's very little point applying for less than £200,000, £300,000 for an Innovate UK grant, in my opinion, very little. So you really want to make sure you're getting out there on the TRL levels, look at them, and that will give you an idea of what you should be doing.
Okay. Thank you. Someone's asking, so once you've applied for the grant, and if it's awarded, how long does it take on average to receive the grant?
Not long. I think it's a matter of, there's compliance issues to do within 3 months, say. It varies by type of grant, but it's not long. They want to get the money out. If the money's already been allocated, it's a case of proof, compliance, audit, and it's a case of making sure everything's been signed, sealed. A bit like, you know, it's like completing on a house purchase after you've exchanged. And it's a case of doing that as soon as you possibly can.
Okay, great. Someone's asking, you've been rejected for an Innovate grant, but then they ask you to reapply. Is that a good thing?
Yes, is the honest answer. It means that you've made some errors. You've made some errors, and if you can address those errors, the one I was talking about yesterday with the doctors, their main error was that the problem that they were solving, they had it on page 20. If they'd have put the problem they were solving on page 1 straight away, so it hits an assessor's eye, huge difference. And that's where it's at. It's not about your ability to do the technology, or it doesn't matter if you fail even. What it's about is understanding how assessors work, which is why the writers and the researchers that put these things together, they are often also on the other side of the fence. They're also the assessors. So even though there's Chinese walls, if you've been asked to reapply, then do so. But I would strongly suggest, don't use me, go and find a really good firm out there, spend whatever you got to spend and get it done properly, because it's a good source of money and it sounds like you've got something decent.
Thank you. And then I've got one last question. Someone that is in the so someone who manufacture organic soaps, they're not a company registered, but they've got a they're in the process of patenting their process, yeah. Then so not a registered company. They've gone through testing lab and certification, but they want to know if they are eligible for a grant for this, or if they fall under the Innovate or R&D segments.
I'm going to say this very clearly. I didn't understand the question.
Oh, sorry. I can reread it. I'll read this.
Are you saying they're not a limited company?
Sorry?
Are you asking? Are you saying that they are not a limited company? Are they business or are they?
They're not. They're not. They said the company is still not registered, but they want to patent their process.
Right. I think that's an offline conversation. Seriously.
Okay.
Because and tell them whatever you do, do not publish your IP until further notice. Do not publish your IP.
Mm-hmm.
And I think
Okay.
you're going to require some structuring as well. So maybe a chat with some of the guys from Evoke might be in order, because that's not something I would get involved in. But if you've got structure to get sorted out, and especially if you're looking at patents and IP, if you do that incorrectly, you are giving yourself a lifetime of grief. I promise you. Robert.
Yes, agreed. Yeah, protect your IP at all costs. Yeah.
Okay, so I think that's all the questions we had for you, John.
Okay, thank you.
So John, you were our last speaker.
Oh, was I good?
Yeah.
Has anybody else got any more questions for myself or the panel before we all depart or close?
Let me see. Just giving it a few minutes for people to type.
Okay. I think Julia, anything coming through?
Yeah, I've got just got a few more. So I've got regarding COVID-19 funding, is any available to suppliers / importers of FDA WHO approved rapid test kits, PCR kits and PPE from Korea? Fairly specific.
I haven't got a clue. Panel?
No, nor me.
Where?
But I think we can probably take that question and see if we can get an answer offline.
Yeah.
You pass that on to us.
Yeah. Yeah. I mean, I don't think I've got much coming. Listen. I think we're just gonna close it now. I'll be sending the questions to the ones we haven't been able to answer to the presenters. And they can maybe take those conversation privately, if that's okay with you all. Yeah.
Indeed.
Right. So yeah.
Can I just thank Julia? Can I just thank our panel today and Evoke management? I thought it was great. Thank you, gentlemen. Do appreciate it. And yeah, thank you very much indeed for you, Virgilia, and for London Growth Hub. Thank you very much all.
Thank you.
Indeed.
Thank you, John.
Yes.
You go. Okay, just to reiterate as well, we will be sending the recording and the presentation to everyone that attended this webinar within the next 24 hours. You will all get a copy of this. Okay, so if there's nothing else from the presenters, thank you, everybody. So I think we'll leave it.
Yeah, thank you, everybody.
Thank you.
Staying with us.
Thank you.
Bye, thank you, everybody.
And